Hi everyone. Today we're starting chapter 11 and just a little recap of what we've done so far in chapters 9 and 10. We were introduced to the special journals for a merchandising business organized as a corporation, and we were able to use the special journals to organize like transactions in the same place. However, some transactions just don't fit into any of the special journals. And so for that reason, we would just continue to utilize the general journal to fit in and journalize some of those other transactions. So that's what all of chapter 11 is about. Today, we're going to start off with our first transaction. It's December 5th, bought office supplies on account from Millam Corp. And so the date here is December 5th. Then we would do supplies office, and that would be debited for $532. And accounts payable Millam Corporation is going to be credited for $532. So the difference here, previously in chapter 3, if we were learning to journalize this transaction from the start, it would be accounts payable dash Millam Corporation. Now we're using a slash, and what that slash indicates is that when we post, we have to post this amount to both accounts payable and also Millam Corporation. So accounts payable would be in the general ledger, and Millam Corporation would be in the accounts payable ledger. Our next transaction is dealing with returns, something that we haven't dealt with before because services, what we did in chapters 1 through 8, they're not returnable, but merchandise is returnable. And if there is a return, you need to account for that. So on the 7th, returned merchandise to Griffin Incorporated, 248. So accounts payable, that is actually going to go down. Why? Because we don't owe them that money anymore. So accounts payable, normal balance is a credit, so we're debiting to make it go down. It's accounts payable slash Griffin Incorporated is debited for $248. And a new account that we're using to deal with merchandise that we return is purchases, returns, and allowances, and that's going to be credited for $248. We also have a new source document here. It's DM32. That's a debit memorandum, and that's utilized for return transactions. Now, the next step is going to be to post from the general journal to the general ledger. So give me a second here and let me go to the next step. So the next thing that we're going to do is post from the general journal. However, we need to post from the general journal to both the general ledger and the accounts payable ledger. So the first one's supplies office, and that's going to be done just like we learned in chapter 4. So on December 5th, from general journal page, this is page 12, so G12, we are debiting $532. A debit and a debit means we add, so the updated balance, let me move my calculator over, sorry. So it's previously $2,948 plus 532 gives us 3,480. So 3,480, and then we put 1145 back up here in the post reference. Do not forget to do the post references. Now, the next account is accounts payable, but also we have a slash Millam Corp, and whenever there's a slash, that means we need to post to two places, accounts payable in the general ledger, and then Millam Corporation, which is our vendor page, which is going to be in the accounts payable ledger. So we'll start off with accounts payable. This is going to be pretty easy. So the date here is the 5th from G12, General Journal, page 12, we're crediting 532. Credit and a credit mean we add, so we're taking $8,493.50. We are adding 532, so it's $9,025.50. So $9,025.50. Now, previously we would do 2110. However, we also have to post to Milam Corp. So we're doing 2110. This is going to be marked as wrong for right now, and I'll show you why in a second, okay? It's because we also have to go to Milam Corp and post here as well. So the date is the 5th, and this is from page G12. Milam Corp also a credit, so $532. Credit and a credit we add, so $1,443 plus 532 equals 1,975, so 1975. Now we have to put 250 back up at the top as well, so 250. Okay, so now we've posted to both accounts payable in the general ledger and Milam Corporation in the accounts payable ledger. All right, so our next step is on the 7th. We're dealing with accounts payable again. So the date here for accounts payable is the 7th from page G12. We are debiting $248. We need our calculator again. So the balance previously was $9,025.50. Sorry, 50 cents. Credit balance with a debit means we subtract. So minus 248 equals $8,777.50. So $8,777.50. And we put 2110 at the top. We add a slash because we also need to post to Griffin Incorporated. So that is on the 7th from page G12. It's a debit for 248, credit and a debit. Mean we subtract. So the updated balance, we have 958 minus 248 equals $710. So 710, and we put 220 back up at the top. And last we have purchases, returns, and allowances. That's going to be in the general ledger. So purchases, returns, and allowances on the 7th from page G12. It is a credit for 248. Credit and a credit means that we're going to add. So we have $4,194.60 minus 248. Our updated balance is $3,946.60. And then we put our post reference 5130 back up at the top. So this is fairly simple. The only addition now between what we've learned in chapter 4 to now in chapter 11 is the addition of these vendor accounts that we also have to post to in the accounts payable ledger. So I hope everyone's doing well, and if you have any questions, please let me know.